Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Wednesday, October 31st, 2018. First off, happy Halloween, folks. And again, if you're a member here, all treats from members of InTheMoneyStocks.com. Profits galore. I want to go over how I called this exact low and huge bounce on the S&P 500 on the markets today. Called it a couple days ago on the flush out. It was pretty apparent based on multiple factors, which I'm going to reveal right here. So first off, you had the basic ones. So number one, I commented on Twitter yesterday morning how panicked and fearful Kramer was. All right, he was just kind of in a crazed situation about how bad the markets were, and I posted up on Twitter. I said, frankly, hey, listen. Bottom line is, Kramer, when we were at the highs on the S&P, he was so bullish, so bullish. It was like weirdly. I even said it on Twitter that day. You can look back at my tweets and see this, folks. He was ridiculously more bullish than I'd ever seen him before. That was the top on the market right here. I mean, it was case in point, dead on. Yesterday morning, he was so panicked, so fearful. The markets, the world was ending. I mean, things were going to just collapse here. This is a horrible situation. And look at what the markets did between the lows from Monday and where we currently sit, or the highs. I mean, you're talking about like a 13-point move on the spiders, which is about 130 points on the S&P 500. So that was the first indicator. That's a very minor one, though. The second one was the general public investor indicator. Now, what that is basically is, based on how many members we have and how much connection I have on Twitter and other social media, there's starting to be an indicator which shows you when investors start to really get fearful. And what I've noticed, and this has happened over every cycle, every major move up or down in the markets over the last multiple years, you'll notice a crescendo of fear in the market when we're at lows and greed when we're at highs. You'll hear, like, for instance, just a couple days ago on Monday when we were collapsing, even some members were like, "Oh my God, this is so bad." They were kind of throwing in the towel, that kind of fear and just like, "Oh my God, this is the worst scenario ever." And that hit, and right away, honestly, I bought more stock right there on Monday afternoon. I mean, it was just like, whoa, I got to get in long. Now, the main one that I paid attention to, not only were all technical indicators overdone, and you had a big support level right here. So if I put a trend line, see this little pivot area right here, look at that, right at 260 even number. But that's just a technical support. You need a bigger functioning signal. So right now I've listed three things, but this next one is the biggest one. This is the one that made us literally book tens of thousands in profit today, folks. I mean, this is one of the best days of the year for members in the research center here at InTheMoneyStocks.com. It's called a measured move. All right, and this is a fantastic one. So if you look at the high pivot from January and the low pivot into February, so this big drop here, all right, if you take that distance, right, and you do the same distance from here down to the lows, it's almost identical, literally within pennies. And that's called a measured move. That's what happens when the markets have basically in them, and this is a lot of computerized stuff now, and you got to understand that the markets are very computerized, but the market knows that the last time we fell this much, the markets had a big bounce, and we actually made new all-time highs. So therefore, the markets, computers, psychology, whatever it may be, they have it penciled in that when you get down the same distance here to here, you're going to see a bounce. All right, and I think we overshot by a little bit, like 40 cents, but that was it. That was a panic, you clear panic there. But in any case, again, this high to this low is equal to this high to this low. I mean, look at. See the distance here between these two is equal to this distance. I mean, this is amazing stuff, and this is really, again, folks, I can't stress it enough. This is why I picked up Toll Brothers, and we just booked almost 13% on it. We sold Valero for a big gain. All right, we sold Soxel. We had bought the triple ETF on the semiconductors. We sold it for over, I think, about a 12% gain. All right, I'm in Wynn Resorts in the money. All right, beautifully in the money. We have other stocks. We sold NVIDIA today. I took profits on Valero calls today. We had stock and calls on that. 25% on the calls in a couple days. And this is the profit. I mean, literally members making tens of thousands of dollars with these calls. And I want to stress that the average investor here, and you may be watching this video, you may have been in the same book, the same kind of league here. Most average investors were in panic mode when we were at the lows here. I can't tell you how many people on Twitter told me I'm insane. You're insane. Markets are going to continue to crash. You're nuts. You're nuts. You're nuts. Boom. I just follow the charts, folks. This is called the PPT methodology. It's a mixture of price, pattern, and time factors we look for. When we see two of the three, price, pattern, and time, two of those three factors pointing to something, there's an 80% chance you're going to get a bounce or a pullback depending on what you're looking for. And that's where it's at, folks. That's why hedge funds now are members. We consult with hedge funds using PPT. We've trained hedge fund traders using the PPT methodology. Members here are just, I mean, they come to our seminars. We just had one in Tampa recently. Just an amazing group of individual traders so dedicated to financial independence. And again, folks, look at the track record. Look at the track record. It's incredible. In fact, here's our website right now. I just figured I'd show it to you guys right now. Here's In the Money Stocks website. If I just go over here, you guys can see right here, track record for the Research Center. Click on that. I mean, this is amazing, folks. Today, these are the profits today. Soxel, 11.2. NVIDIA, 5.6. Valero, 6.363. This was yesterday. We took profits on GM here, 6%. 13% on Toll. FAS just a few days ago on the bounce. I mean, this is just, and you can see we do have a loser. I mean, there's losers there. You can see there's some losers out there, but look at the green, folks. I mean, it's incredible here. And this is your net profit. So when you add up all the losers and all the winners together, we're net 634%. Now, as I always say, that's net. So what you want to do generally, if you want to be a conservative investor and just build wealth, let's just say you put 10% of your account in each trade. What are you up this year? You're up 63.431%. 63 and change percent on the year. Now ask yourself, what's the market done this year? Markets are basically flat to negative this year, right? There you go, folks. Now that's why hedge funds come to us, because we're the only ones. Literally, the hedge funds that come to us, they're the best performing hedge funds out there in the world. All right, it's amazing. This is bar none the best thing in the world. If you want to check something out, here's your Research Center. Go to the Research Center right there, folks. Take a look. This is everything you get. You get the daily analysis video, daily market reports, hot charts, which is where we post our live trades as we take them, entries, X6, etc. Live broadcast twice a week where you can ask questions and see our charts. And here's your 7-day free trial. By the way, we're launching a new website in January. There's going to be no free trial anymore. We're getting rid of it. We don't, honestly, my partner Nick and I are kind of at the point where, like, we know what we give. We don't need members at this stage of our lives, of our trading careers. You know, people want to come and they want to pony up and really learn from the pros. Like, a lot of times when you offer free trials, you get some pikers in the mix. And honestly, I'm kind of, we're kind of at the point where, someone's serious enough. And by the way, we don't advertise, so if someone comes to us and they're serious enough, it's word of mouth. It's people saying, hey, I've made a boatload. Someone just told me in the chat room that their boss recommended us because they're making so much money, so they join. I mean, that's what we do here, folks. It's word of mouth, no advertising. I write articles on the blog. I do these videos. That's our kind of our namesake. That's how we get the word out. No paid advertising. Screw that stuff. I'm just telling you right now, that's nonsense. That's what trading companies have to do and companies like us have to do when they're not good. When you're good, you shouldn't have to advertise. You honestly shouldn't. You should just be able to do your thing, and then people will talk. And people will talk, and more people will join. Simple as that, folks. All right, on that note, I'm going to bid you farewell, but great job again for members here. Hope all of you come and check us out. It's your chance, folks. This is the best trading market in years right now for swing trading. Buy and hold for a few days and make 10, 15%. Boom. Take